What's up, guys? It's your boy Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Plug Power, ticker symbol PLUG, trading for $9.07 as of July 5th, 2020, equating to a market cap of nearly $3 billion. It's kind of bonkers to think that Plug is one of the worst performing stocks in the last few decades, as the company reached all-time highs in the early 2000s, closing at just shy of $1,500, which is absolutely insane to think about. Although it is important to note this equated to about a $6 billion market cap, considering the company currently has a $3 billion market cap at $9 a share. An insane amount of share dilution has taken place. So what's the move? Should we pull the power on Plug? Or are we topping off the tank with hydrogen fuel? This is your quick stock analysis. For transparency's sake, we have a whopping single share of Plug Power, equating to a sweet $9 profit. I feel like it's important to start by addressing the hype surrounding electric vehicles. Investors have to understand that there's a difference between hydrogen fuel cells that Plug specializes in and lithium-ion batteries, which your favorite quick stock company Tesla specializes in. And if I'm being honest, I find myself siding with the experts in the field who are not completely sold on the idea of hydrogen fuel cells in the consumer vehicle market. Which of course I may be biased, as y'all know, even after taking massive gains, we still have well over a $50,000 position in Tesla, which as your humble reporter I try to remain as impartial as possible, but take it as a grain of salt. After that long-winded intro, here's a quick sound clip from the godfather of electric vehicles himself.
I don't want to turn this into a debate on hydrogen fuel cells because I just think that they're extremely silly. And the people have published, there's multiple sort of rebuttals of it online. It's just very difficult to make hydrogen and store it and use it in a car. Hydrogen is an energy storage mechanism. It's not a source of energy. So you have to get that hydrogen from somewhere. If you get that hydrogen from water, so you're splitting H2O, the electrolysis is extremely inefficient as an energy process. If you say took a solar panel and used the energy from that solar panel to just charge a battery pack directly, compared to try to split water, take the hydrogen, dump the oxygen, compress the hydrogen to an extremely high pressure or liquefy it, and then put it in a car and run a fuel cell. It is about half the efficiency. It's terrible.
However, pump the brakes. It's really not that cut and dry. Hydrogen fuel cells have been proven to be extremely useful in other applications. The primary business for Plug Power has been making hydrogen fuel cells that are currently used to power forklifts in warehouses and distribution centers, while having their eyes set on many other projects including drones, EVs, and honestly a lot more. We should also note that Plug has a few catalysts for growth, including a top-tier customer base such as FedEx, Home Depot, Walmart, Verizon, and Amazon. Which it's interesting to note that Plug Power has a significant deal with Amazon, which gives the e-commerce giant the right to buy up to 55.3 million shares, or about 1/4 of the company's outstanding shares, as well as a commitment to purchase up to 70 million of Plug Power fuel cells. And when you think about it, this makes sense from Amazon's perspective, with Bezos attempting to employ a fully automated zero-emission shipping and handling facility that includes utilizing hydrogen fuel cells for forklifts, transportation, robots, drones, and even Amazon's shipping fleet. And remember, these companies put an absolutely insane amount of money into R&D. And clearly the benefits provided by hydrogen fuel cells prove to be the most feasible option from an operation and environmental standpoint. And of course, this isn't the only catalyst for the company. After all, the technology is based on the most abundant resource in the universe. And unlike more common battery pack electric vehicles, fuel cell vehicles don't need to be plugged in, which from a company name standpoint is kind of misleading. Speaking of, one of Plug's main competitors is Nikola, with its hot new hydrogen-powered truck, who clearly took, let's call it, artistic liberty from Tesla when naming the company. As always, it seems like I'm getting off topic. It is important to note that while hydrogen fuel cell vehicles only exhaust water, producing hydrogen can lead to pollution, but obviously at a much lower rate when compared to its gasoline-powered counterparts. In all honesty, Plug has been stuck in kind of a niche market. Its hydrogen fuel cells have yet to make a splash where the big money is, such as cars, delivery vans, trucks, and other on-road vehicles. Which, if I'm being transparent, Tesla's electric vehicles crush any kind of hydrogen fuel cells on the market currently. Both vehicle types use electricity for propulsion. Battery electric cars store that electricity directly in their battery packs, while fuel cell cars store it in a gaseous hydrogen, releasing it through a chemical reaction within the cells. However, when comparing the two, it is important to note that recharging fuel cells is significantly faster than charging the standard lithium-ion batteries. However, remember, it's not going to be easy for Plug to establish a hydrogen fuel cell vehicle market. Its new technology will require specialty service centers, not to mention readily available fueling stations, which currently there are far and few in between, and the ones that exist are expensive. Just to put this into perspective, analysts believe a few 100,000 hydrogen fuel cell vehicles just in California would need to be sold in order for the cost to be competitive with gasoline, which represents a huge jump from the 6,000 cars sold so far. However, who's to say that there's not room for lithium-ion batteries and hydrogen fuel cells in the market? And of course, hydrogen fuel cells benefit in many other ways, such as continuously used equipment like forklifts and drones, which excel from the lighter weight when compared to its battery-powered counterparts, and vehicles that run 24/7, such as potential taxi and delivery services. And I feel like I should quickly note, it is certainly possible a larger company like Amazon could buy Plug, which would represent a huge catalyst for the company. However, it's hard to imagine they would want to take over the company's terrible balance sheet, unless some huge advancements in hydrogen fuel cells take place. Anyways, let's take a look at some numbers. The company has seen a large increase in revenue. However, Plug still is not profitable or cash flow positive. Not only has the company not had a single profitable year in the last 20 years, it actually seems to be getting less profitable as opposed to more. Its trailing 12-month net loss has exceeded $75 million for 10 consecutive quarters. According to Plug's 2019 balance sheet, the company had liabilities of $150.8 million due within the next 12 months, and liabilities of $484.6 million due beyond that 12-month period, with only $139 million in cash and $38.7 million in receivables. So it has liabilities totaling $457.2 million more than its cash and near-term receivables combined. So needless to say, the company's balance sheet is pretty bad, okay? And could certainly represent more share dilution in the future as the company burns through more cash. However, the company thinks it's finally on the right track. Plug has a 2024 goal, which includes getting to $1.2 billion in annual revenue, with $170 million of operating income. Which I should quickly note, the company has a long track record of over-promising and under-delivering on their goals. In 2017, 2018, and 2019, the company reported a net loss of $58 million, $130 million, and $78 million respectively. And I should quickly note, the majority of Plug's expected revenue growth, about $750 million, is expected to come from its material handling industry. Anyways, with all of this in mind, what's our move? Well, in all honesty, this is not a Tesla video, and it seems kinda silly of me to keep comparing the two companies. It's just that a lot of investors getting into Plug are hyping up the idea of hydrogen fuel cells in commuter vehicles, which, don't get it twisted, I'm not a psychic. Advancements in technology could certainly make it possible. Remember, the idea of Tesla accomplishing what it has, even thinking back 10 years, is pretty unthinkable. However, the thing is, Tesla has already proven itself. They've overcome the 101 roadblocks that were in its way. If you want to get into the future of green vehicles, it just seems like Tesla is a much safer bet. However, once again, pump the brakes. If you are less adamant that hydrogen fuel cells will completely replace lithium-ion batteries, but instead be a complement to electric vehicles, I can definitely get behind that, along with the other uses for hydrogen fuel cells that have already been proven feasible. Certainly does offer Plug a sizable addressable market. It's just that the company does not have a good track record of taking care of shareholders, and unless something rapidly changes in the direction of the company, an investor should be expecting many more large shareholder dilutions in the future. However, I certainly can't fault an investor who wants to start, a spec play in regards to future technology that the company may produce. It's just that in our quick stock long-term portfolio, we already have a massive player in the market, and for that reason, I have no interest in investing in Plug Power. Anyways, guys, that's all we've got for today. As always, the best investment you can make is to go long on quick stocks. Hit that subscribe button now at 600 subscribers and plan an early retirement. I will catch you guys in the next one.